Okay. Peter Rose, Longwood Currency Trading. It's a cold, very cold, like 8 degrees, February 26th of 2022. And as you can see, I'm outside, and we had a big snowstorm last night. Got about 8 inches, I think. We were supposed to get a little bit more, but I think the storm swung to the other side. So we had news that something was going to happen, and it happened, but it wasn't quite as bad as we thought it was. So look, what does this have to do with Forex trading? Well, it has a lot to do with it, because if you're walking around believing that you're going to read the news about what's going to go on in the economics of the world, and you're going to base your trading on that, you're going to get caught. Well, sometimes, just statistically, you'll get it right, and you'll make a ton of money. But sometimes, most times, you'll get it wrong. And if you've got good stops and you've got good presence of mind, you can get out with minimal damage. However, in a real bust out and not having any stops, you could lose your account. So, I mean, I don't mean to beat this to death, but we had Russia invading the Ukraine the other day, and the stock market plummeted 850, 860 points, that's a big drop. I mean, that's just huge. 300-point drop at this particular time is a big deal. But 800 points, and it went down like a stone. And I had put some orders in for a particular stock that I have, trying to pick that up. That was down quite a bit. I'm in there fairly heavy, but I thought I'd pick up some more because it was on sale. And I never got it because the market rebounded. My stock that was down 15 cents, it's not an expensive stock, my stock that was down 15 cents came back and closed the day 4 or 5 cents up. I don't know what it was because I don't give a shit. A couple of my orders hit to buy more, but whatever. But the stock market ended up 100 points up for the day. And then the next day, it was up 800 points. So it goes up 1,000 points in reaction to the 800-point drop and the world-shattering news that Russia invades the Ukraine. Now, you know, if you have tried to trade non-farm payrolls or whatever country you're in, whatever the equivalent economic thing is for that, you know, you probably ought to sit on the sidelines. Why? Because the volatility is so high. Remember, and I've said this quite a few times, it isn't so much the volatility that we're looking for as traders, but it's the momentum. And it's the consistency of the momentum that allows you to say, oh, from a probabilistic standpoint, I think this is going to continue up or going to continue down, whatever. And so I'm going to pop an order. But volatility doesn't provide that for you because it goes one way and then it goes the other way. For example, we've talked a lot about pin bars, but here's the perfect example. The U.S. stock market drops 800 points in reaction to news that should have been already discounted. I mean, Russia's been amassing at the borders 170,000 troops. What did you think they were going to do? Have a fucking picnic? You know, and so everybody's sitting around and Putin is saying, well, we're not going to invade. Well, you know, okay. You know, this is politics. This is a whole different level of playing field than you and I and a lot of other people, like 90%, are able to function at. I remember my brother, Alan, very educated, had a PhD in 19th century English literature, could speak 4 English dialect languages, and you know, very, very, very bright guy. And I enjoy reading, you know, literature, the classic literature, and I had I don't know, I had picked up a book that was an analysis of a particular author's work. I don't know whether it was Shelley or, whatever, that was being analyzed. And I contacted my brother and I said, what the hell is this guy talking about? I read the book, I could kind of figure it out, but what is this guy talking about? He says, you can't read a book like that. That book is written for intellectuals, where they debate and discuss the topics among themselves, and it's not for the common man to read. Well, what do you think the geopolitical news is? Is that for our consumption? No, the people are discussing this stuff at a much higher level, and yet there were a lot of people that lost everything in that 800-point drop. They didn't stay. They didn't stand. They panicked and they got out. Why the fuck do you think the market went down? Because everybody said, oh, I'm just going to hold on because this is going to be temporary. No. Everybody was bailing out. It was shit through a goose. And so there were a lot of folks, because the stops were not being respected and the prices, nothing traded. It was panic. So some folks that had, $60 stocks were down at $30 and before they could get out. And they sold and they continued to sell and liquidated just as the stock market went back up $100. If they'd have waited 2 fucking hours, they'd have been okay. I mean, look, if the whole world is going to collapse and go to shit, and the stock market is going to go to zero and go out of business, it doesn't matter whether you got your money out early or not. Your money isn't going to be worth anything. You have to understand how to play these games if you're going to try to trade. If you don't know what you're doing and you're skittish and you're trading short stacked, you're going to get hurt if you're trying to trade off the news or what you think, what I call an opinion. You save your opinions for movie reviews, folks. It's not practical. And so, look, if you've been trading for a while and you got hit with this last turmoil that's going on and you lost money, or, some politician in your country, had a heart attack and the currency swung and you lost your money or whatever. Look, don't feel bad. That's what everybody does. But if you're going to trade foreign currencies in particular, don't do it like everybody else. Don't fall for that. There are ways to protect yourself, but you can't concentrate on how to protect yourself. You're not supposed to be learning how to protect yourself. You're supposed to be learning how to make money. If you're going to be out there worrying about stops and risk and all that, you're not going to win this game. You have to solve the risk problem right up front. You got to have a hard and fast rule for where your risk is, on a per trade basis and on a panic in case the thing spikes. How much pain are you going to be willing to take? Don't forget, if you lose 50% of your account, then it's going to take you 100% return just to break even. Well, what do you think the odds are that you're going to get 100% return on that account in anything under 4 years? If you're trading scared, 0. So if you're going to play this game and you're going to be stupid and get wiped out, lose 30% of your account, and you don't know what you're doing, you're done. You're never going to bring it back. And you're going to feel like shit because you can't double your account every 3 months. Look, you got to look at this stuff realistically. And if you're looking at the news, or you're trying to base your risk and your decisions on what's going on in the world around you, you're playing short stacked. You really are. So all I can tell you is that if you are having trouble, you need to step back from your trading and look objectively at the world around you and at the world that you're trying to compete in. if you're a swimmer and you're, whoa, we just lost a lot of snow off our roof up there. It's almost all gone, but a big chunk of it just slid. When that happens, it scares the shit out of Bo. But look, if you're a swimmer and you go to a pool, you're used to swimming in that pool. You can swim around that pool, and you know where the deep end is and all that stuff. But then you walk out to a lake, and you're not really sure what the depth is or whether there's rocks or whatever below it. You have to think about that. You can't just have been playing in your little pool area or your little round plastic wading pool at home and go jump in the lake. You can understand that analogy, right? Well, you got to look at the things the same way when you're looking at the currency markets, or any trading market for that matter, but the currency markets in particular, because of the leverage that we have, the small margin that we have to put up with, and the fact that some of these currency moves can provide wonderful opportunity for us. You know, if you balance your winning goal at the end of the year, how much money do I want to make? I could really use an extra $20,000. Okay, well, how big of an account do you need in order to do that? You can figure your way back and be happy with making a couple of $1,000s a month. You know, there are some people with experience and with an emotional background. You probably can't see me standing there with the sun at me, right? That can double accounts in 4 months in a year. I mean, I've doubled a small account, a $5,000 account in 4.5 months. Could I do that? I said this. Could I do that with a $500,000 account? No, I don't think so. Could I do it with a $100,000 account? No, I don't think so. Because the rules are different, and the emotions are different, and the risk level that you have to take is different, and the amount of times that you have to trade is different, and you're dealing under pressure. Why deal with pressure? Trading is fun. But if you're out there trying to shoot for the fence all the time, man, you're not going to enjoy yourself. You know, if you sat down, as I've said in many, many videos, and just clipped off 5 or 10 pips a day with maybe half of your account size, so that if the thing starts to run, you can load up the truck and dump it all in there, you're going to have a good time, and you're going to make some money. You want to make more money? Don't try to do it with more pips or pushing the envelope on extending your risk so that you hope the price comes back. Don't do that. Put more money into your account. Oh, well, I don't have any more money. I'm trying to make money. Well, you're just screwed. You're just screwed, because life doesn't work that way. It doesn't work that way. So when you start to look rationally at the market that you're competing in and what the characteristics of that market are, who the dog in the market is, because it's not you, it's the institutional trader. Well, what's he trying to do? How is he doing his business? And how does that reflect on what I'm trying to do? It doesn't, by the way. So what is it that I have to do in order to win the game? That's how you build your rules. I mean, any dumb fool can build a trading plan, but you know, that you have to be reasonable and say, oh, my trading plan is I'm going to do the 3-bar engulfing candle magic shit, whatever it is, you know, and you can get that thing to work a bunch of times. When you see it there, oh yeah, I can get that to work. As soon as you start putting that in as your trading system, you're going to get caught, because the markets don't respect that. If you think anything different, you're crazy. You know, there was a big rush. Everybody's doing the London Open for a while, and people were making money left and right. The people who understood that it wasn't the London Open bar structure that they were trading, it was they were trading. You don't have a recipe to trade. You have rules. And the rules have to be based on different conditions that you see price action working in. You don't need that many rules, folks. No, you really don't. But what you do need is the ability to look objectively at what price is doing in the market that you're trying to trade in? And who are the other people that are trading in that market? And is that market affected by the guys that are trading in the big time? If it is, then you got to understand a little bit about that. You got to understand yourself. You got to understand the characteristics of the time frame that you're trading on. And you have to have a serious grip on what a reasonable daily target goal is. You know, Rob Booker used to, when he was talking sense and he was doing FOREX, he must have got whacked pretty bad because he's doing stocks and all kinds of crazy shit now. But used to say, you know, when you start trading, try to make $1 a day. Just $1 a day. And when you can make $1 a day, when you can come out of that after a month and you've made $1 a day every day, then trade for $2 and do that for a month. And if you lose any money, you don't know what you're doing. You got to go back and you got to analyze it. And most people aren't willing to do that. You know, I talk to a lot of people. I talk to people with a lot of money, and they're trying to get involved in currency trading. And I tell them, if you're going to talk to me, you got to start with $1,000, and you got to follow some rules, and you got to do this. And if you can't trade on $1,000, you're sure not going to be able to trade on $100,000 that you want to put into the market. And they all go, "Fuck you! I don't want to listen to you." Well, okay. Oh, okay. Well, you know, that's to your detriment. You know, I haven't spoken with too many folks lately in the last several months that have had that kind of attitude. This is, you know, maybe a year ago. Because anybody who watches my videos knows that I'm a no bullshit guy. I'm going to tell it to you like it is. And I've been where you are, and I don't like to be there. I don't like to be a loser. You know, I was successful in a lot of things in my life, and I've been very fortunate. And I understand that my rules have to change for the currency market because this is it is a different market than any of the other markets that are out there. And so I've had to adjust quite a few things in order to get comfortable with those changes. And it's very difficult, and I've been very honest with you. Coming out of 40 years of real estate investment, I'm applying the same rules. It's just the timing has to be a little different, and I didn't understand that to start with. And I still have trouble with it because, geez, you spend 40 years developing successful habits and instincts and stuff, and then you come into a market where all that's got to change. That's really hard. You guys probably don't have 40 years of real estate investment or whatever that's going to be counterproductive to you changing your timing and your trade. You're starting out fresh. Jesus, don't screw it up by being a loser. There's no reason to lose. You should be able to make far, even if you're a new trader, you should be able to be successful by the end of the year if you just be reasonable about the rules that you set for yourself and what your expectation is. If you can get through 2 or 3 months of successful trading and have an equity curve that's growing, well, be happy with that. I mean, if that's all the money that you have to put into it, be happy with those results. Don't change, right? Wait until you sell your car or you inherit, money, or you get a new job that's many times greater than the salary that you have, or maybe just hit the Powerball or something for $10,000 or $50,000 or whatever it is, and then take that money and add it to your account. But don't change your rules. That's the key to the thing. And don't worry about these huge economic events that are going on around you and be fearful of trading as those things are going on. If you've got good risk management, you'll be fine. Try to trade. If you lose 2 or 3 times in a row because of the volatility, well, you're just not sensitive to that volatility on that day. Close it down, go have a cup of coffee, right? And then come back the next day, and you'll be fine. It's too much fun to lose your money. It's too much fun to get stressed out over this stuff. You should be able to sit down for a couple hours Make what you need to make for the day, and then go about and live your life. Man. This isn't a dress rehearsal. We don't get to come around and do this again. Or maybe we do, but we don't know that for sure. But what we do know for sure is that when we get out of bed in the morning, it's got to be a good day. You got to have a good, positive attitude, because if you get out of bed and you go, oh, my back hurts, I don't feel good, and I lost a ton of money yesterday, and my dog bit me, you're going to have a crappy day. So the only way you can change who you are into who you'd like to become is to alter the way that you think, because you're a product of the way that you think, and thoughts are things. That's what my karate master, Sam Brock, taught me 50 years ago. And I've lived my life according to that. It's me that has to change, not anything else. I can't change anything else, but I can change me. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.